My dear accounting students, this is your accounting coach ARD, and today we are going to discuss about errors. As you may be aware, whenever we are making accounts, there are certain things that go wrong, and this is known as an error. So, in everyday life, if there are errors, what we do, we tear a page, or maybe we use eradicator or Vito or something similar in order to avoid that error. But in accounting, you do not do this way. What are you going to do? You are going to make journal entries. Journal entry means one account would be debited and one account would be credited. Now the original error will be left as it is, and do not need to cancel that page or tear this page apart. What we need to do, we need to make journal entries in order to correct that error. So when talking about errors can be classified into two broad categories. One is errors that do not affect trial balance, and secondly, there are errors that do affect trial balance. Now, in this lecture, I am going to focus on errors that do not affect trial balance. As you may be aware of what is a trial balance, let me remind you about trial balance. You used to make T accounts when you were young. Yes. Yeah, when you were young, you used to make T accounts. A T account is an account which has two sides. One is debit, left hand side is debit side, and right hand sides are credit sides. So what we need to do, whenever we make a T account, at the end of the month or the year, we need to balance that T account. So whenever we used to balance that T account, the short side is balance CD and the greater side is balance brought down. Now all of the balance brought downs that are opening balances are collected in one place, and this place was known as trial balance. As you may be aware of, there are assets, expense and drawing, the nature of which is debit, and the liability, income and capital, the nature of which is credit. So all of the debit balances will come on the debit side, and all of the credit balances, income, liability, and capital will come on the credit side. At the end of the month, this trial balance is balanced. Means the debit side and credit side are always balanced at the end of the period. So what we used to think when we were young, we used to think that if the trial balance is balanced, this means debit and credit side are equal. There are no errors in the accounts, which is obviously not true. Why? Because today we are going to discuss 6 types of errors that do not affect trial balance. Errors that do not affect trial balance means there is an error in the accounts, still our trial balance is balancing, means debits equals credit. So debit equal credit does not mean all of the errors are gone. There may be some errors. In fact, these 6 types of errors remain in the books even when the trial balance seems to be balanced. Now apparently we can see that trial balance is balanced, but this does not mean our accounts are free of errors. There are 6 errors still under the carpet. They are there and we need to sweep them out. So how we need to do? First, we need to understand the types of errors. So the 6 errors are named as error of commission, then there is error of omission, then we have error of principal, then we have error of reversal, then we have error of original entry, and finally we have compensating errors. Now in order to remember these 6 types of errors, I have made a mnemonic for these, and the mnemonic is COP ROC. COP ROC. COP, COP means commission, omission and principal. There are 3 errors COP, and then there is ROC. ROC. ROC stands for reversal, original entry and compensating error. So with the help of this mnemonic, you would like to remember these errors. So let's move about discussing these errors one by one. First of all, we have error of commission. Error of commission means this is not the type of commission that we usually refers to. If I broker a deal with someone and the charges that I am asking for is my commission. So this is not the type of commission that we have learned previously. Now what is this error of commission? Commission means that we have made an entry but the account is wrong. Now I have given an example here in my notes. The example is there that I have sold goods to ARD, which is my debtor, and because of error I have wrongly used AKD's account. Now see, ARD is also my customer, for example, and AKD is also my customer, but by mistake I have used wrong customers or wrong person's account. This is known as error of commission. Error of commission is said to occur when we have used the wrong account, but the type of account or the class or category of the account is right. Means ARD and AKD are both of my customers, or for example, I have bought goods from Mr. X and by error I have credited the account of Mr. Y, but the X and Y are both my suppliers. Let me give you one more example. I have paid someone through bank account, so therefore my bank account should have been credited, by mistake I have credited my cash account. So bank and cash are both current assets, therefore the error is known as error of commission. In error of commission, the account is wrong, but the category or type of account or the debit credit is right. There is no error in debit or credit, or there is no error in the class. One more example. We have paid rent for the year and by mistake we have used insurance account. So the rent and insurance are both our expenses, but we have used wrong expense account. This is known as error of commission. So for example, if we have incurred an error of commission, how can we correct this error? For example, we have sold goods to Mr. ARD, but by mistake we have used account of Mr. AKD. So what we'll be doing, we'll be crediting AKD's account and we'll be debiting ARD's account. So this is known as error of commission. So whenever we need to correct this error, we need to make a journal entry. Now let's move forward. The second error is error of omission. Error of omission is said to occur when we have completely forgot to make an entry. We have not debited nor we have credited any account. So this means we have completely forgot to make an entry. This is known as error of omission. For example, we have sold goods to Mr. ARD. The entry should have been ARD debit and sales credit, but we have altogether forgot to make that entry. So now what we'll be doing, we'll be making that entry, the entry that was previously omitted or forgotten by us or our accountant. So we'll be making an entry ARD debit and sales credit. This is error of omission. So why does a trial balance cannot detect these types of errors? Trial balance cannot detect error of omission because the debit side is also short and the credit side is also short by, for example, $90. So both of the sides are equal, although the totals will be wrong, but still the trial balance would be balanced. Both of the sides would be at least equal. So this is known as error of omission. In the error of commission, why does the error cannot be detected by trial balance? The reason is that ARD or AKD, for example, both are your debtors. X and Y both are your creditors. And rent and insurance both are your expenses. So trial balance cannot differentiate between different types of customers and different type of expenses. So both of them should be debited. Then we have error of principal. In an error of principal also, first of all, you must remember the spelling for principal is PLE in the end and not PAL. So the students make this mistake. They write error of principal PAL. So principal, you may know, is the head of the organization, especially for an educational institute such as your school and college. So we'll be using PLE. So this is the basis or maybe logic. So this is known as principle. Conventions or rules, these are principles. So in an error of principle, we have made a wrong entry. The account is wrong. The account was also wrong in error of commission. Now what is the difference between error of commission and principle? In an error of commission, the account is wrong, but the type of account is right altogether. In an error of principle, the account is also wrong and the type of account or the category of account is also wrong. For example, we have bought a motor vehicle. As you may be aware, motor vehicle is a capital expenditure. It is an asset for the business. So what we did, we have debited motor expense instead of motor vehicle account. So we have made a capital expenditure. Instead, we treated that capital expenditure as a revenue expenditure. So when capital expenditure is treated as revenue expenditure or vice versa, this is known as error of principle. What is the difference between commission and principal? In the commission, ARD and AKD were both debtors. But in this expense and asset, there are different categories. One is treated as a non-current asset in statement of financial position, and one is treated as an expense in an income statement. So this is known as error of principle. Let me give you some more examples for error of principle. Other than this asset and expense, we have invested money into the business. The entry should have been bank debit and capital credit. So what we did, we debited the bank, but we credited the loan account instead of capital. So we use loan instead of capital, or we use capital instead of liability, or we use income instead of loan. So this is known as error of principle. Again, why does trial balance cannot such type of errors? Because a liability is also credited and capital is also credited. Income is also credited and liability is also credited. So now we are playing in one category, means the category is different, but the debit or credit side does not change. Okay, we are not treating asset as a liability. Instead, we are treating asset as an expense. Both of them are debit. Or instead, we are treating liability as capital. So again, both of them are credit. So one is error of commission, one is error of principle. There's a slight confusion between the two. The confusion can be removed by this principle that in error of commission, the account is wrong, but the type of account is right. In error of principle, both the account also and the type of account both are wrong. So this is known as error of principle. Now, which one is a bigger crime, error of commission or error of principle? And I can hear your inner voice. The bigger crime is error of principle, because in this we have used the wrong account and the wrong category as well. So how to correct error of principle? It's very simple. If you have bought a motor vehicle, we have by mistake used a motor expense account. So motor expense would be credited and motor vehicle would be debited. Then we have complete reversal or reversal. In a reversal, the account that should have been debited is credited, and the account that should have been credited is debited by mistake. So this is known as complete reversal, or in short, reversal. For example, ARD is a customer. He has paid us, for example, $200. So whenever a customer pays us the money, we'll be making an entry. Bank would be debited and customer ARD account would be credited. Now what did we did? We have made the reversed entry. So what did we did? We credited the bank and we debited ARD's account by 200. This is known as error of reversal. The account that should have been debited is credited and the account that should have been credited is debited. Now what we need to do, now we need to correct this error. Now reversal is in fact only one error out of these 6 errors, in which the correction, when we correct the error, we use double amount. So if we have made the error for 200, we'll be using the account amount as in the correcting entry, we'll be making an entry by 400 instead of 200. Now why are we doubling the correcting entry amount? The reason for this is that, my dear students, that ARD paid us, we did not debited the bank. Now if we debited the bank by 200, that debit and the error entry that we by mistake credited 200, these both entries cancel each other out. So if we are getting money from ARD, we should have debited the bank. Instead, we credited our bank by 200. Now if I debit the bank by 200, the debit and credit, the wrong entry and the right entry both cancel out each other, and the payment that we have received from Mr. ARD has not yet been recorded in our accounts. So what we need to do, instead of making 2 correct entries, one for cancelling out the old error and one for recording the new transaction, what we need to do, we need to make an entry for double amount. So 200, instead of 200, we'll be making an entry of 400. So this makes sure that with the 200 amount, the error would have been cancelled, and the next 200 amount, the newer entry would be recorded. Now just remember, my dear students, out of these 6 errors, only in reversal of entries, only in complete reversal will be making an entry with the double amount, and all other transactions will be making an entry with the single amount. So let me give you one more example. For example, you have made a schedule for yourself, and that you will be studying 2 hours daily. On a daily basis, you have made a budget in which you have decided and you have committed to yourself, not with anyone else. You have decided, you have committed to yourself that you will be studying accounting 2 hours for daily, for example. Now, one of the days, some of your friends were at your place and they were coming from maybe another city, and these are your relatives or friends, and you have to give them time so that you skip your study for that day. Now, the next day, the very next day, when you will be sitting for your studies, would you have to study for 2 hours or 4 hours? 4 hours. 2 hours for the current day, and the 2 hours as a compensation for previous day. So this is known as complete reversal. So then we have error of original entry. In an original entry, the debit credit is right, the account is right, and the category of account is also right, but what is wrong? The wrong thing is the amount of the transaction. For example, we have sold goods for 100, instead we have made the entry by 1000. Now why does our trial balance is so maybe saying a baby, and why does he cannot understand that this error has taken place? The reason for that is, in an original entry we have made a double entry with the wrong amount. So if we have sold the goods to Mr. ARD for 100, the entry should have been ARD debit and sales credit by 100. What we did instead, we made an entry for 1000 on both the sides. ARD was debited by 1000 and sales were credited by 1000. So the debit side also increased by 900 and the credit side is also increased by 900, and the trial balance again is balanced. So how we need to correct the error of original entry? In my case, in my example that I just gave you, we have overstated ARD's account and sales account by 900. Instead of making an entry by 100, we have made the entry by 1000. So what we need to do, we need to reduce or decrease sales account and as well as reduce ARD's account. So entry would be reversed. ARD account, customer account would be credited and sales account would be debited. Originally sales are increased when we credit them. Now we need to decrease the sales by debiting the sales and crediting ARD by 900. So similarly, if the transaction was vice versa, means if the sales was basically 1000 and by mistake we have recorded 100 sale, so then we need to make another entry for 900. The entry would be normal entry 900 ARD debit and sales credit. So I hope you understood this error of original entry. And an original entry only takes place when a wrong amount is entered in both the sides, such as debit and credit. So if the error is made on one side, means on one side we are using 100 and on the other side we are using 1000, this entry is not classified as error of original entry, because then that entry would break the double entry and would not be classified as error of original entry. And last but not the least, we have the error of compensation. Error of compensation, my dear students, said to occur when two errors cancel out each other, when two entries compensate each other. So what happened in error of compensation? In one error, we overstated purchase by 500, for example, and on some other occasion we overstated sales by 500. One times our debit side increased by 500, and on some other occasion, some other error, credit side also increased by 500. So both of the sides increased by 500, then the errors cancel out each other, and this is known as compensation error. So my dear student, compensation error, one thing to remember is that compensation error only occurs when these two errors are occurred in separate instances. Means this is not one error, there are two errors that by mistake cancel out each other, and the net effect of that is 0. Sometimes, for example, someday we understated our incomes, and some other error we understated our expenses. Now, if both of the items are understated with the same amount, this is known as error of compensation. So I hope, my dear students, you understood these 6 types of errors and you can remember them by COP-ROC. If you like my videos, you must subscribe my channel. Subscribe and subscribe. Thank you.